The dollar is a scam. But why are many of these elites now moving into Bitcoin, XRP, these fixed supply assets? In today's video, I'm going to break down at a very deep level an understanding of inflationary US dollar that makes you poor every single year if you don't beat inflation, to the new system where a lot of these very, very wealthy people are buying up all the supply of things of Bitcoin and things like XRP. But I'm going to break it down and help you understand why, because I never, ever want anybody to say, what should I invest in? It's why am I investing in something? So in today's video, I'm going to break down how I believe the dollar is a scam, but why would we use the dollar, right? But they indoctrinate us. It is the strongest currency in the world, and it's not going to collapse. Don't worry. The Genius Act was genius, the Stablecoin Act. It is going to make the dollar more dominant. But you have to understand why the Trump family now is the top 6 holder for Bitcoin treasuries with True Social, why the Trump family has made more money in the 18 months than they ever would have made in real estate with cryptocurrency and digital assets. And I believe in the next 24 months are going to blow away in 2 years what they made in a lifetime in real estate. Why Ray Dalio went from in Bitcoin to about 5% allocation. Why the third wealthiest billionaire in Mexico is 70% in crypto, and why the whole White House is now pro Bitcoin. So let's dive right in. So the first thing I want to show you guys is why. Okay, why do I believe the dollar is a scam? It's a Ponzi scheme, guys. It's very important to understand this is not our grandparents' economy, and this is not our parents' economy. So what I want to do here is I want to provide financial literacy. What they should be doing is signing executive orders to provide rewiring the education system. This is what they should be teaching our kids. This is what I'm teaching my children. Okay. Since 1913, the US dollar's collapsed almost 99% since the Federal Reserve was created. Their job is to protect the job markets and money supply. Well, they've done a horrible job of that. Okay, now this is interesting. The US dollar's collapsed 99% since 1913, and we're the strongest currency in the world. So it's not just America that's in trouble. This is a global transition into a distributed ledger technology, a cryptocurrency, new quantum system that is going to change everything. And there's going to be a supply shock and a supply and demand issue very quickly. But remember, they told you to run from it. Then why do they own so much of it now? I'm going to show you exactly why. So Bitcoin Magazine posted this, and it says, which one is a Ponzi scheme? It shows you the US dollar is the top one, unlimited supply. And I'm going to break this down even deeper into inflationary and deflationary so you can understand why I build my ecosystem the way that I do. And I'm going to tell you exactly how I do it on the back end. Okay. So you're here right now. This is where you're at. Okay, you can't see my thing. See at the top? So this is, if you look back 1913, I'm going to show you a lot of details around this. So it's an unlimited supply. The US dollar is not backed by anything, and it's centrally controlled. Well, that sounds weird. So it's centrally controlled. It's not backed by anything, but they have a button where they can just print money. What happens if you run out of money? You can't just go in your basement and print money. You can't make money out of thin air, but they can. Now, Bitcoin has a fixed supply. Also, XRP, which I'm going to show you, has a fixed supply backed by energy, which is its technology and its use case. No one can control it. Okay. And people are like, oh, XRP is centralized. No, it's not. It's decentralized. They own 4 of the validators. I think there's 340. It is a decentralized system. Bitcoin is decentralized. We don't know who Satoshi is. No one can control it. Anybody can transact on it. Very, very important. So which one looks like a Ponzi scheme to you? Let's go a little bit deeper to help you understand the actual Ponzi scheme. Okay, this is our national debt, which is 35. I think it's coming up on $37 trillion. But let's take a look at this. Okay, we're going to go back to 1924. Okay, we had 395 billion in 1924. Look at this. Watch this. Watch what happens when we get to 1970. Okay, here's when we detach from the gold standard. 1971, August 1971. Boom, boom, boom. Look at this. It starts going up, and then you're going to see it skyrocket. Okay, so we detached. Look at it. Just keeps climbing. Financial collapse coming up to it. Housing crisis. Boom. Housing crisis. And it just skyrockets. This right here, 2017, is when they started telling you, let's go back. Look at this jump. Look at this. Boom. Okay, Bitcoin is created right here, 2009. 2009, Bitcoin is created. Look at this. Once we got to 2017, BlackRock, Trump, all of them told you it's used for money laundering, nefarious activities. Okay. From that point, the national debt skyrocketed. Here we are. 2024, now 2025, we're at 37 trillion in debt. Check this out. Okay. This is 2024. This doesn't even show 2025. Okay. So this is up to 2024, 123% debt to income ratio. So what that means is every dollar you're paid in is someone else's debt. There's no real money in the system, family. Like, digest that for just a second. Sit with your family on that. You're paid in another person's debt. Why do they need to lower interest rates? Because we're a debt-based society. If you can't buy a home and you can't leverage against your future self in a 74-month auto loan, you can't get a new credit card, there is no real money in the system. The whole system collapses. So if we paid off all our debt and we were responsible, the whole monetary system would collapse. So as you're in a inflationary system that they manipulate through interest rates, okay? They lower interest rates, they print money, it causes inflation. What happened from 2020 to 2024? 19% buying power was sucked out because they lowered interest rates, they printed a ton of money, then they jacked up interest rates, and then you guys went into inflation. Now Trump is going to lower interest rates, they're going to lower interest rates, they're going to print money, but that's your income, guys. That's your income. This is why I talked to you guys about inflationary and deflationary. Okay, what is an inflationary currency? That's the US dollar. It's the money when you pull up your banking account, when you see those dollars in there, that is inflationary. So when I pull up my bank account and I see cash in there, I want to quickly transmute that into something that creates cash flow, okay, is deflationary as a fixed supply that I can protect and then I can leverage, okay? We'll go deeper into that. So inflationary means the currency rates of fiat currencies are floating. Their value is relative to other currencies. It's basically what we believe the value is of the currency. Okay, it's manipulated by interest rates. When we lower interest rates, which we're about to do, the value goes down, more people go into assets. But what the public does, the working class, is they borrow more stuff. They get debt. They get deeper in debt. What the wealthy do is you lose leverage. Okay, let's take debt as working class. Debt makes us poor. The wealthy use debt, which we'll call it leverage, to become wealthier. Okay, new units of fiat can be made at any time, which makes it inherently inflationary. So they can just print it whenever they want. They're going to print a ton of it and lower interest rates. So it just gets less valuable and less valuable. So you work harder and harder and your money is worth less. The more units that are in circulation, the more likely it is that they're worth less. Deflationary means fixed supply currencies are tied to a material good or limited by code. They are inherently deflationary as they cannot be made at a whim. Fixed or decreasing supply and steady demand usually makes them grow in price. So now do you see why I transmute my cash, which is trash, into deflationary assets, hence Bitcoin and XRP. Number one is XRP for me. Number two is Bitcoin. So Bitcoin is the first and largest cryptocurrency with only ever spawned 21 million coins. After this pool runs dry, there will be no more new Bitcoins. In fact, most of the coins, over 18 million as of writing this article, have already been mined. Since the mining reward is growing smaller and smaller, Bitcoin can already be seen as deflationary. When this limit is reached, it will become truly deflationary. Cryptocurrencies such as Litecoin and Bitcoin Cash have similar limits. So the difference, and I'm going to show you XRP in just a moment. So Bitcoin has a fixed supply. 95% of supply is gone. 95% of the public doesn't have exposure to crypto. So who owns this? Who owns it? I just showed you guys in the last video. Okay. 80% of the supply is not moved. It's operating like a store of value, not a currency. Okay. And the reason why it's deflationary is because only be mined for another 116 years Okay. It's not out on the market. Only, I think it's 450 a day get mined. So it's going to have a supply and demand issue here in the very near future. So if people just hold a Satoshi, you don't have to buy a Bitcoin that's at 117 as I do this video, 117,000. You could buy a Satoshi of Bitcoin. So what I do is I store my cash in Bitcoin. Okay, that's my store of value. I also use it to leverage to buy assets, which I'll break down in just a moment. The next one that I talk about is deflationary. That's what I want to share with you the why behind this. Deflationary, it says here in this article, but other cryptocurrencies have gone a different way. Ripple made XRP, its native cryptocurrency, deflationary through a different process. The Ripple company releases the entirety of so they release the entirety of it. Bitcoin will be released over the next 116 years. Okay. 100 billion when it first began. 55 billion of its total sum has been escrowed. I shared that with you guys, locked into a special account. Well, the rest is going down day by day since every transaction burns, that is, destroys a small amount of XRP. Okay. So Bitcoin is deflationary in the fact that all the supply is not out there yet. In 116 years, it will all be gone. There'll only be buyers and sellers. But the way they release it, and a bunch of people buying up in countries now, there'll be a supply and demand issue. There'll only be a buyer and a seller. XRP, all the supply is on the market, 100 billion. 50 billion is held in escrow by Ripple, and they release it into escrow so that institutions can buy it up. Okay. The cool part about it is every time a transaction goes across it, it becomes deflationary. That's why there's so much supply. That's why Bitcoin has 21 million. It's its mechanism. It's a store of value, in my opinion. And you have XRP, which is a bridge currency, totally two different monsters, two different worlds. So when people are like, Bitcoin, XRP, it's like it's two different monsters. For me, XRP, Bitcoin represents gold, store of value, and my leverage component. We're building wealth with Bitcoin. I'll explain that in just a moment. XRP is owning a part of the new infrastructural change in the financial system and the liquidity crisis and removing the nostro vostro and freeing up liquidity for trillions of dollars of transactions every single day. So here's how I do it. Okay. Okay. First, I hold Bitcoin forever. I'm not touching it. Okay. Let's put that off to the side. I focus on four components: cash flow. Cash is trash. Do you see why? Okay, let's go back. Let's go back. I want to provide some financial literacy here. Cash is trash. Cash is trash. I focus on inflationary. So I create cash. Okay. What I do is with that cash, I put it into number two, deflationary assets at fixed supply. That's what I'm talking about, what I just explained to you. Okay. These have fixed supplies, unlike the US dollar. For example, from 2020 to 2024, US population lost 19% purchasing power. I gained 600% when Trump got elected and 200% on my Bitcoin, 600% on XRP. So as you lost 19%, I gained 600% on my money and 200%. And as the bull runs kicked off, I've now gained almost 900, 890% on my XRP and about 200 and still about 220% on my Bitcoin is staying steady. Okay. You see what I'm saying? So just very simplistically, I'm taking a dollar that is worth less and I'm moving the dollar into something that has a deflationary fixed supply, which makes it worth more. Okay. So that's number two. And then number three for me, I use insurance, cash value life insurance, because number four is very important, leverage. So I stuff money, monthly premiums into my cash value life insurance. And when the bull run hits, by using Merlin, the smartest way to track your crypto, we can show you how to do an exit plan. I exit altcoins. Bitcoin, we're not touching. Okay, remember, we're not touching Bitcoin. I exit on the way up 50%. I'm holding 50% of all my coins, just like I'm holding Bitcoin. 50% it goes up because I have something to do with every single dollar. First is max fund my policies. Why? Number four, leverage. I got a Bitcoin bank and an insurance bank. Okay. Next, I'm buying more cash generating dividends. I'll take 10% of my profit, put it into cash generating dividends. The cash generating dividends are the highest risk part of my portfolio, producing the largest amount of return. But what do we do with the de-risk? It's cash. It's trash. We de-risk it back into Bitcoin and XRP, stacking my bags every single month. So it's a flywheel that I created. I move cash into deflationary assets, into dividend ETFs that pay me cash. When they pay me cash, I move it into deflationary assets, de-risk. Okay. Every month I pay my premiums. When the bull run hits, I max fund the policies. Now I have 2 leverage components. I bought a bunch of deflationary Bitcoin and XRP. I have Bitcoin as a bank and I have insurance as a bank. And then what do we do in the bull market or bear market? We leverage from our assets to buy more assets. Richest man in Babylon. Let me give you an example of Bitcoin. I borrowed from my Bitcoin to buy my insurance brokerage at 14%. I went to a DeFi platform. I borrowed my own. So I used Bitcoin. I locked it up. Okay. They gave me their money to buy the firm at 14%. Didn't sell any of my Bitcoin, no tax liabilities. Okay. My firm was already generating income. So I put myself in first position. I bought my own insurance brokerage. Okay. Paying it back at 14%. Why would you pay 14%? Because Bitcoin grows 50% every year historically. I'm making 36% of my money. So when this is paid off, I bought an insurance brokerage for free. Do you see what I'm saying? And as soon as that leverage is paid off, boom, I'm running low leverage. Okay. No more than 25% of my overall Bitcoin portfolio. And then I'm going to buy, guess what? More cash flow. So firm will be generating cash flow. I bought it for free. I made 36% by buying it. Buy more cash generating dividends. Boom, it'll pay it off. Boom. And then they'll have a set of cash generating dividends, creating cash. And I'll do it again. And I'll do it again. And I'll do it again. That's richest man in Babylon. So as everybody waits for their portfolio to go up and then it comes slamming back down and they wait for it to go up and they, follow the hype people, we're building empires, cash flow, leverage. So the first phase was getting rich, financially free, but you can screw that up. The next phase is wealth. Okay. That's wealth. That's where you work to stack as much as you can by turning $1 into 3. That's richest man in Babylon. Okay. Money is currency. It wants to move. Okay. You can't be attached to this stuff. You can't be scarce mindset and holding on and like, oh my God, it's going to save me. No, it's not going to save you. There's nobody coming to save you. Jesus said, pick up your mat and walk. Nobody's coming to save you. Money is currency. It wants to flow. Banks make money in 3 ways: interest income, fee income, and capital markets income. Move yourself in first position. That's what we did. We're now the bank. Okay. We're making interest income off our supercharged savings on our cash value life insurance. We're using DeFi platforms. We're the lender. We're lending to our own selves, getting tax-free money. And then eventually when DeFi gets really solidified, we'll be able to lend our money to other people. We're in first position. That's the beauty of the transition that's happening right now. So I hope that financial literacy helps why when I talk about inflationary versus deflationary. The dollar's a scam. It's a Ponzi scheme. Right. You're going to have more money in your pocket. It's going to be the richest economy we've had ever, probably in America. But the money you have in your pocket is debt. Wealthy people don't use debt to buy cars. They use assets to buy cars. Wealthy people don't use debt to buy iPhones. They use leverage to buy cash generating businesses. With the cash generating business, they buy the watch, they buy the stuff. We have to get on the other side of this quadrant, family. Study Ray Dalio's Changing World Order, Cash Flow Quadrant, Robert Kiyosaki. Okay. Richest Man in Babylon, Wisdom of King Solomon. So I hope this information reaches your heart. Well, the dollar is a scam and you are part of the Ponzi scheme. So when someone tells you that cryptocurrency is a scam and it's a Ponzi scheme, show them this video. Sit down with them and have a deep conversation on what the next steps are for your family. I'm not telling you what to do. I'm telling you exactly what I do. There's a big difference. I love you guys. I appreciate you. As we always say, Warriors, let's get your shit together. God bless you.